Hello, everyone, and welcome to another edition of the Smart Investor Market Show, where smart investors get their up to date price analysis and market information. And today we're going to speak about being counterintuitive. And I had a discussion a number of months ago about the trouble that the healthcare sector would be in after the new administration changed and the implication for the health sector on a whole. The argument was that the health sector would go down because of the new president. He won't be kind to healthcare, and it was a time to kind of get out of healthcare related stocks, healthcare related instruments. Now, what we have in front of us is the Healthcare Select Sector Funds, an ETF that tracks the healthcare sector. And as you can see, it's tracking to new highs for the year. And if you really take a look at the market, it's just shy of its all-time high. So that's why sometimes you can't really look at what is happening on in the news and then automatically translate it into what may happen with the markets, because when things are in uptrends, when things are trending nicely, it's in an uptrend for a reason. So there are larger things at stake here, and the best thing to do is kind of follow what the trend is saying. So this healthcare sector, I've gotten a number of questions about my thoughts on healthcare sector at this point in time. It's in an uptrend. It's near all-time highs, and my advice would be to hold on to a ETF like this. Looking at since 2013, the ETF debuted in 99. It was kind of sideways 99. It bottomed in 2009, just shy of $25, and it's now at $82. So quite a long run up. And since November, when the election took place, it was at 65, and it's currently up to 82. So still a positive movement in this sector. Looking at the broader indices, we see that stocks had a mixed picture. Actually, the Nasdaq just turned positive. We have the Dow up 24, the S&P 500 up 2.95, and the Nasdaq up 1.16%. When I checked a bit earlier, the Nasdaq was slightly down. But taking a look at the charts here, we see that the market is still in an uptrend, making new highs. So this will be a new intraday high for the S&P 500, and the market is marching up fairly nicely, still in an uptrending mode. And yesterday I spoke about the fact that why I'm bullish, and the reason why I'm bullish, and I wouldn't necessarily be buying positions at this point in time. So let me just define what bullish means. Bullish means that I am favoring the long side of this market rather than the short side. So I wouldn't be buying up at these levels. What I would be doing is holding positions and moving my stop losses under the market as the trend continues to go up. So the S&P 500 is positive for the day. The Dow and the Nasdaq are also positive. Taking a look at the currencies, we see that the US dollar index is down slightly on the day after bouncing from strong support in that 91 region. So it will be interesting to see if the market continues to gather steam, or will we go and retest this 91 level in the US dollar index. Euro versus the US dollar. Euro is up against the dollar today. And looking at the Japanese yen is up slightly on the day. Okay, looking at the gold market, we see that gold is pulling back, continues to pull back, and I believe this is a significant pullback in the market and would be a good buy market strategy. Yes, gold could come down a bit further into the 1220, 1200 region, but this is setting up that we could see the market start to bounce, and it could give us a fairly strong buy signal in gold. And I believe that gold bottomed in late 2015, 2016. The bottom is at 1050, and we're seeing that the market went into consolidation and is now breaking out of that consolidation, testing the consolidation breakout point for a move upwards over the next couple of months. So that is my thoughts on gold, and that's why I believe in terms of risk to reward basis, it is actually a fairly good time to get in. Now, naturally, most people won't get in near these lows. Wait, first of all, let me just be clear. The buy signal for this pullback has not been put in yet, but I believe we got a broader buy signal for the gold market. But the reason why most folks won't get in now, because nobody's hyping it. The mainstream media is saying nothing about it. If you speak to your neighbors and your friends, they won't be speaking about gold. Everybody will be speaking about the rally in S&P 500, the rally in Dow Jones Industrial Average. So that seems like the hot thing. But the stock market is, I believe, within the last 10% of its rally. And what next? We are constantly thinking as investors, what next? What's the next thing to put money in? And I believe gold will be a strong sector. So I'll be looking for a longer term buy in this gold market. Definitely a good opportunity for investors when the strong signal occurs. And gold can definitely rally way above the $1,900 level where it topped out in 2011. We could see this market go well above $2,000, $2,500 over the next couple of years. It won't happen tomorrow morning, but it could happen over the next couple of years. And that's why I believe right now is the time to be looking to put on positions in those in the gold and the silver market. Taking a look at crude oil, we see where the market is down on the week. Crude is kind of in this sort of consolidation pattern, and until we see a break in either direction, it will be difficult to garner where exactly this market is going. Taking a look at the European markets, just monitoring. Yesterday we spoke about the fact that the German DAX was near its all-time high, and we are still moving to the upside, and the market is looking to really close above this $13,000 region for the German DAX. So very strong and very promising price action here in the German DAX. Is the FTSE over in the UK following? And folks in the UK need to start to follow. For my friends in the UK, we see that the FTSE is also moving up and gaining back on that high that was made in May near the 7600 level. So things are really up in equities across the board. Looking at an individual stock that I spoke about, an ETF, we spoke about the biotechnology ETF. I spoke about it yesterday in terms of that this was a performer over the last couple of years. We did get a pullback, and now the market is marching forward. It's coming up on that 340 region. So IBB, to my mind, is a hold. In our model portfolio, we do own IBB, and we'll watch it continue to ride to the upside after getting our longer term buy signal. Okay, that is it. Remember, we'll be starting our theme-based shows, and what that means is that every day we'll highlight a particular area of the market, whether it's commodities, sectors, currencies, etc., and really pinpoint that area of the market, because we're we're in a global environment, and the way to make money in these markets is to be continually looking out for investment opportunities. So thank you very much for listening, and I hope you will have a wonderful day.